Is day trading just another form of gambling? The short answer: it depends on how you approach it. There are experienced traders on our team who take short-term trading seriously, with a clear plan, carefully tested strategies, and proper risk management. For them, it's not gambling. However, we've seen some beginners dive in without a plan, chasing quick wins. That's when day trading can start to look like gambling. In this video, we'll break down the similarities, highlight what separates short-term trading from gambling, and reveal the common mistakes we see day traders make that turn their activities into a game of chance. So what are the similarities between day trading and gambling? Well, just like in gambling, day trading comes with the risk of losing money, sometimes very quickly. The fast pace of intraday price movements can wipe out your capital in minutes if you're not careful. And just like a casino, the market doesn't care if you're a beginner or a seasoned trader. It will take your money if you're not prepared. In fact, a study by the Financial Industry Regulatory Authority found that 72% of day traders ended 1 year with financial losses. The rush of a winning trade and the sting of a loss can also trigger emotional highs and lows, not unlike what some experience with gambling. These dopamine-driven reactions can sometimes push day traders to chase the next win, making it harder to stick to a rational plan. Without self-awareness and control, the emotional side of trading can start to take over. In the short term, markets can also be highly volatile and unpredictable. News events, earnings reports, or unexpected economic data can shift prices rapidly, much like the random outcome of a roulette spin. Even with years of experience and solid analysis, most day traders can't consistently predict what will happen in the next few minutes or hours. This unpredictability can make it easy to confuse day trading with gambling, especially for those focused only on the next trade. That said, there are some key factors that separate day trading from gambling. First, experienced traders don't rely on luck. They've developed an edge. This could be a technical setup or a strategy that's been back-tested across many trades and market conditions. While gamblers hope for a favorable outcome, serious traders build systems that give them a repeatable advantage over time. Another one of the biggest things that separates a short-term trader from a gambler is risk management. Experienced day traders use tools like stop-loss orders, proper position sizing, and defined risk-to-reward ratios to limit losses and protect capital. In contrast, gamblers often go all in without any safety net. Controlled risk ensures that a single loss doesn't take you out of the game. Finally, smart traders adopt the bigger picture mindset, focusing on consistency, risk management, and discipline over time. Instead of concentrating only on short-term wins like a gambler, skilled traders manage risk and trust their process over the long term. Day trading becomes a serious business, not a spontaneous bet. Now that we've covered some of the key similarities and differences, let's explore some of the common mistakes we see day traders make that turn them into gamblers. After a losing trade, it's tempting to immediately try to win it all back. This is known as revenge trading, and it often leads to impulsive decisions and even bigger losses. Much like a gambler doubling down after a bad hand, day traders who chase losses are more likely to blow up their account. Emotion takes over, and strategy goes out the window. Using excessive leverage is also one of the fastest ways to turn day trading into gambling. While it can amplify profits, it also magnifies losses. And one wrong move can wipe out your entire account. It's the equivalent of putting a huge pot of savings on a single spin of the roulette wheel. Responsible traders manage leverage carefully and never risk more than they can afford to lose. Finally, without a solid trading plan, every decision is just a guess. Jumping into intraday trades, based on emotions, social media hype, or gut feelings is no different than pulling a slot machine lever. A plan includes entry and exit criteria, risk parameters, and performance tracking. Without it, you're gambling, not trading. So is day trading gambling? Well, it depends on your approach. If you're throwing down wild bets with no plan, you're gambling. If you have a disciplined approach with careful risk management, you're trading. With the right mindset, strategy, and discipline, day trading can become a skill-based activity, not a game of chance. Avoid the pitfalls, follow a plan, and treat day trading like a business. Want to approach day trading the right way? Check out our beginner's guide to day trading. It covers the essentials from strategy to risk control, so you can trade with a plan, not a guess. If you like this video, don't forget to give us a thumbs up and let us know what you'd like to see next.